Hello, good morning. Good morning, everyone, and welcome to a new episode of Chat and Chart. This is London Session Open, and this is your host, Saif Qaddoura. Hope all is well. Without further ado, let's get to it. Let's see what we have in this week's high impact news calendar. Let's go day by day, explain how it might affect the markets, and then we move to the charts and we prepare for the week ahead. Let's get to it. Okay, so we start with Monday, which is today, December 1st, 2025. We enter the last month of this year. We have S&P Global Manufacturing PMI. The previous reading was at 52.5. The forecast is 51.9, which is a decrease. And the actual, if the actual comes in higher than expected, then it's a positive sign. It's a expansionary sign. If it comes in lower than this, it means that the manufacturing sector is slacking in the US, which could mean that this would eventually affect the growth of the economy, and we see lower GDP. Now that's for S&P, but anyway, the forecast is above 50, so above 50 is considered to be expansionary. All right. Then we have the ISM Manufacturing PMI. That's the global manufacturing, and this one is the manufacturing, ISM Manufacturing. So the previous was 48.7, and the forecast is 49. So it's expected to improve a little bit, but it's still below 50, so it is still in the contraction territory. All right, guys. If it comes in 50 or above, that would be a very good surprise for the markets, and that would boost the US dollar. If not, we will see more weakness on the dollar because of this news release. Then we move to ISM manufacturing prices. We had this ISM manufacturing PMI. Now we go to prices. Previous is 58, and the forecast is 59.5. When the prices go up, it means that this could impact inflation. So when prices go up, the manufacturing prices go up, it means that eventually the producers will pay more to manufacture goods, and then they will pass this high cost to consumers, who will in turn pay more price or higher prices or inflated prices to get the same good. So that's how we get inflation. So this number is expected to be hotter than the previous. If it comes in lower, it's good for inflation. If it comes in higher, it means inflation could be sticky or sticking around for a little bit longer. So that's it for Monday. Let's move to Tuesday. Okay, on Tuesday we have the most important, in my opinion, is the speech of Jerome Powell, the Fed chair. I believe he will address like monetary policy issues, inflation issues, and I think he will highlight the data loss that they encountered because of the government shutdown. That was the longest government shutdown in the history of the US, 43 days without like collecting data, without updating the markets with data. So that must have hurt the Fed and their decision, and it might have blinded them for a while. So let's see what Jerome Powell has to say about that. And then tomorrow we have, after the speech, we have the CPI coming from the Eurozone. The previous is 2.1. The expected is also 2.1, so no change. That's the year over year for the month of November. So if it comes in at 2, it means congratulations for the Eurozone. They achieved their inflation target, which is 2%. If not, it means that they should keep rates a little bit higher to achieve their target. But 2.1 is pretty much the same as 2, because like sooner or later it will be achieved, the 2% target. So they're not very far off. They're one step away, and I believe they can manage that. Okay, so that's for the Eurozone. Then we have the job openings from the US. The previous reading was 7.227 million. new jobs. Now, if we see an increases in this number, it means that the jobs market is still hot and it's still tight. This will like give the Fed more time to think. They don't need to cut rates to boost the labor market. So we might see a shift in the rate cut odds for December. But if it comes in lower, it means that the labor market is getting hurt. So they need to cut rates to boost the economy and boost the jobs market. All right. That's it for Tuesday. Let's move now to Wednesday. Okay, on Wednesday, we have all the numbers coming from the US. We have ADP non-farm employment change for the month of November. The previous was 42,000. The forecast is 19,000. So if the actual comes in higher than expected, that would be positive for the US dollar. If it comes in lower, it means negative for the jobs market. So lower rates to improve that. So lower rates means lower US dollar. Okay. S&P Global Services PMI. We saw the manufacturing PMI. Now we go to the services PMI, which is the backbone of any economy, and like specifically the U.S. economy, because like the services sector is like way bigger than manufacturing, and way more important because like services cannot be replaced. It's very rarely to find substitutes for like specific services. So the previous is 55, the forecast is 55, so no change. If it comes in higher, that would be positive for the economy. If it comes in lower, it would be negative for the economy. But anyway, it's expected to come in higher than 50 points. If anything above 50 is considered to be in the expansion territory. So we're okay. And then we have the non-manufacturing PMI, ISM non-manufacturing PMI. It is expected to go down a little bit from 52.4 to 52, but it's still above 50 again. It's still above 50, so we're good. We're still in the expansion territory, but the expansion is slowing down, which could mean a lot of things. For example, one of them is that the growth is like slacking now. Okay. ISM non-manufacturing prices now. The previous was 70, which is pretty high. The forecast number on like is not out yet. But if the actual comes in higher than 70, it means like this could affect the inflation numbers coming later this month. If it comes in lower, that would be good for the inflation progress, and we would see the Fed more comfortable cutting rates in December. And finally, on that day, which is Wednesday, we have the crude oil inventories. 2.774 million previous reading. We don't have the forecast yet. It is not released. But if the actual comes in higher than that, it means that supply is outpacing demand, which is negative for the prices of the oil. If it comes in lower than this or in the minus, it means that demand is outpacing supply, which is positive for oil prices. Okay, so that's it for Wednesday. Let's now move to Thursday. We only have one data point, which is initial jobless claims. The previous was 216,000. The forecast is an increase in jobless claims to 220,000. Now, meaning that this is worse because more people are claiming to be jobless. If the actual comes in higher than this, it would be negative for the US dollar. If it comes in lower than this, it would be positive for the US dollar. So that's it for Thursday. We move now to Friday. We only have the core PCE prices for like the monthly numbers and the yearly numbers for the month of September. So the numbers that are going to be released this Friday are numbers coming from September. All right, because of the government shutdown, they did not issue some numbers. Now October's numbers are gone forever, but we have some numbers from September that have not been announced yet. So now they're releasing them this week. So the core PCE month over month, the previous is 0.2. The forecast is the same. Year over year is 2.9, and the forecast is 2.9. So no change in that. If those two come in higher than expected, it means that inflation is higher, which would reduce the odds of the Fed cutting rates this December or like next week. If it comes in lower than expected, so inflation is going down, the Fed now has room to cut rates because inflation is trending downwards. So that's it for Friday. And we are done now with the economic calendar. Do you have any questions, guys? Do you have any questions? Let me check. Hello, hello. All right. I'll wait for 1 minute and then we'll move to we'll move to the charts. All right. Anyway, let me prepare the chart and I'll answer any questions if you have any. Now we go to here. All right. Okay. Now my screen is okay. Everyone is saying we are good to go to the charts. So let's do that and move to the charts. All right, guys. So as always, we start with the DXY. Because like this is a new month, a new monthly candle just opened, so it's wise to check how the previous monthly candle closed. So we had an engulfing candle the previous month, and last month's candle tried to retest, but then like closed indecisively. So I believe if we like maintain this like level, which is 99, without breaking, which is last month's lowest price. If we maintain that and we go above 100.4 and break, I think we will start seeing the rally. But otherwise, we might see like deeper corrections if it breaks 99. As for the weekly, okay, so the weekly doesn't look as good as monthly because last week was bad for the US dollar. We might see a drop towards 99.15, and then there it will have the 10-day moving average on the weekly, so or 10 period moving average on the weekly, waiting for it at 99.15, which could like cause a reaction to the upside. So the weekly does not look very good, but as long as we're above this price, which is 99, we're still good. Let me go to the daily. Okay, so let me tell you what happened here. So we had this trend and then we broke above, so we drew another speed line. It retested that speed line and then went lower, and then it broke it again and retested this speed line, and now we broke above. No, so now we have 1, 2, 3. We gave it 3 chances to continue going down, but it decided that it's going up and it's retesting the trend line from beyond. It's retesting the trend line from the outside, which is a bullish sign. This, by the way, guys, is called the fan principle. I explained it several times in my live streams. So this way is just a way to make sure that the price is actually broken the downtrend. So we give it based on the fan principle, we give it 3 attempts to change the slope of or the speed of the trend. If it breaks 3 of them, 3 trend lines, 3 speed lines, 3 different slopes, then we most likely have a trend to the upwards. So we have higher highs, higher lows. As long as we're above this low, which is 99, we are okay. We just need to see it break above 100.40 to see higher highs to first target, which is 104.60. So that's for the daily. Let's take a look at the 4 hours real quick. Okay, so on the 4 hours, it's just sitting on the 200-day moving average, which is a very important level. As you see here, this is the previous low. That's why I'm saying if it breaks this and closes below, we're most likely going to see uh, um, like weakness, more weakness on the DXY, possibly towards next lows of 98.6, and then we might see 98. But for now, we have this safety trigger, let's call it. As long as we're above 99, we're okay. Once we break above 140, 100.40, I mean, we're going to see a continuation to the upside momentum that we have been seeing on the XY. All right. Recommend Forex books for beginners: Trading in the Zone by Mark Douglas and Technical Analysis by John Murphy. Those are the best. All right. So now let's move to the next one, which is Euro. So we go to the weekly. No, let's go to the monthly because we closed a monthly candle. So let's take a look. Okay, so exactly the same as 1 second. So very similar to the DXY, but like the exact opposite, actually, not very similar. The exact opposite of the DXY, we saw a strong bearish engulfing candle here. We saw a retest, and now if we break above 1.1660, we might see more upside on the euro. But if it maintains this level, it means that euro is still good, and it's going down. To confirm going down, we need to break 1.1465, which is like 160 pips from this level. So that's for the monthly. We go to the weekly. Okay, so on the weekly, it's like the opposite of what we said on the XY. It used like the previous week looked very good, but then last week gained some strong momentum on euro. And if we break above this level, as you can see, I have my stops there. This is my same trade from previous weeks, for those of you who are watching me. So once we break below this level, I'll be relieved that my trade is correct. If not, I'll just like get my stop loss hit around 1.1660. All right, guys. So that's for the weekly. Let's move down to the daily. Okay. On the daily, we have lower lows, lower highs, all good. As long as we don't break this, we will keep making lower highs and lower lows. Okay. Let's hope it does not just like stop loss or hunt the stop losses, then go down. We need to watch out for that. And what else? That's it, actually. That's the exact opposite chart of the DXY. But if you break 1.1660, we might be going to target 1.17. That would be another possible entry. But for me, I say if it stays below 1.1660, that would give it more momentum to the downside. Okay. The Forex Mind, love you too. Thank you. Thank you. All right. So now we move to the next one, which is GBP USD. We go to monthly. Okay. So on the monthly, actually the GBP USD is being very bearish. Last month it closed like slightly up, but we are still below this level. So I think it's still going down. Let's just take a bigger look. Let's zoom out and see. Yeah, I think it's still like it's going down. Let me check the weekly. Okay, so on the weekly time frame, we had this uptrend or the upward movement on the GBP USD, but we broke the trend of this movement. Let me show you. And we retested from the outside, and now we're moving downwards. Now, what stopped the GBP USD from going down? The 50-day moving average, and the weekly candle is actually a very bullish candle. If you notice, this is an engulfing candle at a very important level, which is the 50-day moving average. So we might see a drop towards 1.3160, and then like a continuation to the upwards. But I doubt, because our analysis is showing us so far that DXY is going to get stronger. It's gaining momentum and it's gaining strength. So let's see how that goes. But as long as it's below this level, which is the previous high of 1.3475, we are good. We will keep going down, because that would be the downtrend on the daily. It's respecting the slope. We have 1, 2, 3, 4, and so we might see 1.3320, so 100 pips from here, and then we might be seeing weakness again. But until then, I would wait and see. If we don't break this level, which is 1.30, I think the GBP is going to climb even higher. Okay, so that's it for the GBP USD. We go to the 4 hours just to check quickly. On the 4 hours, we're above all moving averages, which is a bullish sign. Look here. So we might be targeting 1.3320, as I said on the daily time frame. So long story short, if it goes above like around 1.3320, it is a good place to sell with stops 100 pips to the upside, and you have like 2 or 300 pips to the downside as a target. If it goes down to 1.3160, that would be actually a good buy or a good buying opportunity, depending on the behavior, of course, with stops below this low, which is 1.3. Okay, that's it for now. We move to USD JPY. Let's take a look at USD JPY and see what's happening there. Let's see how the monthly close. The monthly close super bullish. So that's this aligns with the DXY analysis. So that's super bullish closure. We still have room to the upside. Now the weekly isn't so bullish, but it's still bullish. You cannot consider this to be like bearish, because we're above all moving averages, and we had a closure outside the band. So this could be just like a retest to 154, 154, and then a continuation to the upside. But we need to wait and see. Okay, so here we have the first red flag, which is the breaking of this trend line. If it stays outside this for 2 consecutive days or a weekend, we might consider like a deeper correction, possibly towards 152 and maybe 149 even. So let's wait and see. But the day is still early today. The day is still young. It might close somewhere around here, and this would be like a long wick or a rejection. So it's early to judge based on the daily candle, because it's not closed yet. We only take decisions and like think based on closing prices, not on market prices. Okay. All right. So on the 4 hours, we see that 155.2 is actually a good level. 155.15 actually might be a good level, which is the 126-day moving average. If this moving average holds the price above it, we might see a rejection and a continuation to the upside. So that's it for USD JPY. So guys, as you see, in the markets, like all different instruments are standing on a cliff, as if they're waiting for something to come from the US so that the DXY can decide whether it wants to go up or down. It's right in the middle now. Like if it goes up, it's gonna continue going up. If it goes down, it's going to be a deeper correction. So that's what I'm seeing now, and it aligns with different instruments. So USD JPY is almost done at 155.15. The DXY is almost done at 99.15. I think no, at 99, and the Euro USD is almost done at 1.1660. So we're almost around the pivot points of each instrument. So that's a very interesting start of the month. Like anything could change right now. We might see a lot of volatility. We might see a lot of stop loss hunting. So you need to pay attention to those messages that we get from the market. The market, as of now, is still indecisive. It does not know what to do, and that's why we see a huge climb in gold and silver. And talking of which, let's move now to gold and see what's happening. Now, as always, we start with the monthly, sorry. So the monthly closed super bullish. We're still going up. Nothing makes us think bearish. So even like on the first day of the month, we broke last month's high, which was 4,240 something. We broke above that, and now we're at a new monthly high, and I believe soon enough we will see an all-time high. So we go to the weekly. The weekly also closed very bullish. It's closed above the band. We saw a correction towards the beginning of 200s, and then continuation to the upside. We go to the daily now. Also super bullish. We had this triangle here. It broke above, but as long as we're below this, I will need to wait and see, because this might be like a longer, or like this consolidation, or like triangle pattern might take longer, and we might see it. For example, let me show you. Like now, this might be one leg, and this is the second leg, and third, fourth, fifth, and then we start going up. So we might see some corrections. It's still not done yet. Let's go down to lower time frames to see. So breaking this, one second, let me change those. One sec. Okay, so it could look something like this, but I'm not sure yet. I would stay bullish anyway, but we saw three waves to the downside, three waves to the upside. So now we have A and B. Now then we have C, which could be around 4,090, and then we go back up to 240, which is a lower high than this, and then we move back finally to E, which could be somewhere around 120, and then we start seeing a climb to the upwards. So still, we might see a correction on gold before going up, or that's the first scenario. The second scenario is we just broke above this, and we're going to keep climbing and reach an all-time high by the end of this year. So we have two scenarios now. We have one scenario of like a longer consolidation. Maybe we will be consolidating for the next 2 weeks, or like the next 10 days, which would be great, to be honest, because I'm already in buys, but if it gives me more opportunities, I'll add to my position. So it would be a great place to buy if we're stuck in this range for a couple of weeks. But once that range is done, we all agree that the price is going up. we all agree that the overall trend on gold is an uptrend. So we will see new all-time highs very, very soon. But the question here is it going to keep going from here, or are we going to see a longer consolidation, or like with this pattern or the triangle pattern, which is a continuation pattern, by the way. And if you look before this pattern, we see an uptrend. So a continuation to what? To an uptrend. So we're going up more and more. Let's keep an eye and see if we get a correction. If we get a correction towards this area, we shouldn't be scared. That would be a good place to buy. And if we get stuck, you don't want to get bored. Just keep holding, because we're going to see new all-time highs very soon. And if you're already in buys, keep holding. That's the best thing that you do. If you're already in buys, that's great. All right, so that's for gold. Just a quick look at silver, because silver is very interesting. Silver is at an all-time high, guys. Look, it's going crazy. It's going crazy. Now the next target is, based on my analysis or old analysis, is 60. Imagine. We opened, like, the month closed at 53.3. This month opened at 56.6. Imagine. Like, this is crazy. This, like, those times are honestly crazy, because you don't see this every day. Markets are actually going wild on silver and gold. But we might see a correction from this level, which is 60, 60.5, and then from anywhere around 47 would be a good buy. But overall, I've been, like, preaching and begging people to buy silver when it was, like, I don't know, 23, 22. And as you can see, it almost tripled now. So yeah, silver is great, and it's moving way faster than gold in terms of a percentage. Okay, so now we have gold, we have silver, and let's finally move to the Nasdaq and indices in general. I'm gonna just go through the Nasdaq real quick, just to give you like an idea, because if you watch the news, you will hear them say the AI bubble is going to burst very soon, and we're going to see a huge crash, and so on and so forth. So like maybe 10 days ago, when it was like the market was dropping like crazy, one of the TV channels asked me, like, what do you think about that? What do you think about the narrative of the bubble bursting? My answer was simply that it is very rare for investors to guess exactly or to time the time of the crash. It is almost impossible. So, are we in a bubble? Yes. Is it going to burst this month or like very soon? I doubt, because the technicals are showing us that we're going to see new all-time highs on U.S. indices. So, regardless of what the narrative is, or regardless of what the like news headlines are saying, we're still in an uptrend. That's what I care about. I care about an uptrend. So if I am in an uptrend, I'm not going to assume otherwise. I'm not going against the trend for no matter what reason. I will never move against the trend. So so far we saw a huge recovery on the Nasdaq. So last week we saw around 4.7% recovery, which is great. On the daily, as you can see, it got rejected from the 126-day moving average, which is a very important place to get rejected from. So our analysis is showing us new all-time highs. Our technicals are showing us new all-time highs to around 27,000 points on Nasdaq 100. All right. So that's pretty much it. I hope this was helpful, guys. Trade responsibly. This last month of the year could be volatile. You could like a lot of stop loss hunting happens in this month. So make sure you stay protected. You have your protective stops at all times. If you need anything, you know where to find me on our different channels. So I hope this was helpful again. Take care of yourselves and have a great trading week. Take care of yourselves and trade in. Bye bye.